Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
Marky, you were interested in rental properties for a long time and you thought about getting started, but you just couldn't do it. What was holding you back from actually getting started and buying your first rental property?
Well, Dan, honestly, I think it was just the expensive properties that I was seeing out here in the East Coast. What I was interested in was cash flowing, and I wasn't seeing anything that would make the numbers work here in New York and New Jersey. So I decided to look outside of my area and into smaller markets that would cash flow.
Marky bought his first out-of-state property from a turnkey company. These are companies that buy beat-up, run-down properties. They fix them up, they put a tenant in place, and then they turn around and sell it to an investor. Once Marky saw that this actually worked and he was actually making money on it, he figured that he could make even more money by putting his own team together, finding his own properties, and then fixing it up on his own. So that's what he did. And on the show today, we're going to talk about his experience buying a property from a turnkey company and then doing the BRRRR strategy on his own from out of state. Joining us on the show today from Jersey City, New Jersey is Marky Suazo. We'll take a really quick break to thank our sponsors. We'll come right back and we'll talk to Marky. If you're looking for a quick and easy way to finance a rental property, reach out to Chaley Ridge from Ridge Lending Group. She has a loan program where she only cares about your deal. She doesn't need to see your pay stubs, your bank statements, or your tax returns. The only thing she's going to look at is the deal. She wants to know, does the property cash flow? If it does, she'll give you a 30-year fixed-rate mortgage. Now, the rates are going to be a little bit higher than a full doc loan, but it's still a great deal. She can close quickly, and there's no hassle. If you want to learn more, reach out to Chaley personally at ridgelendinggroup.com. That's RIDGE lendinggroup.com. NMLS 42056.
Rental Income Podcast.
Marky, did you try to invest locally? Like, did you look around to see if you could find that 1 in a million deal that was that would work for you cash flow wise?
I did. I started looking in Jersey City, Bayonne, which is another town very close to Jersey City. And to be honest with you, Dan, I could not find anything for less than $500,000. And that was for, like a studio or a 1-bedroom, 2-bedroom apartment. If you go into multifamilies, you're not finding anything less than $1 million. So I knew I couldn't afford that and cash flow the way that I wanted. So that's what led me to start looking into other markets such as Memphis, Little Rock, Kansas City was another market that I was looking at. So I decided at that point that I definitely had to look outside of the tri-state area.
All right, so the prices are really high, but the rents just didn't keep up. They were high, but not high enough to give you the return that you were looking for.
Exactly. So at that point, since I was listening to a lot of real estate podcasts and listening to books, I came across what I'm sure many of your listeners know as the 1% rule. And in the tri-state area, to get anywhere close to that metric is next to impossible. So that's what led me to start looking outside of New York and New Jersey.
For anyone that doesn't understand, the 1% rule just basically says that if you're going to buy a property, you want it to rent for 1% of the purchase price. So a $100,000 house, you would want that to rent for $1,000 a month. So, all right. So looking for something that is going to meet the 1% rule. So you mentioned that you were looking at a couple of different cities. You ended up buying in Memphis, but how did you get to Memphis? Like, what were you looking for in a city?
Well, I was looking for a single family home that would somewhere like a 3-bedroom, 2-bath, because my research indicated that those are the types of homes that tenants tend to stay longer. They tend to attract families and things like that. So when I was looking at the various markets, it just seemed that the rent to price ratio was the best in Memphis. Any search that I did online when it came to top out-of-state markets, Memphis was always in the top 10 at the time. So I decided to go with Memphis. Actually took a trip out there to view some of the properties as well.
Okay. So you saw that Memphis has a lot of jobs, a lot of renters. Like I think Memphis, 50% of the population rents. So that is a good a good market. All right, so you went down there, you checked it out, and then tell me, like, how did you find your first property?
So the first property, because it was my first one and I wasn't, too confident in terms of trying to do everything myself, I decided to go the turnkey route. So I found a company that I thought was going to do the job that I wanted. One of the things that was attractive about them is that they had a rental guarantee where if they couldn't rent the property within 90 days, they would begin to pay the rent until they found a tenant. So I decided to go with one of the companies I found out there. And I think I lined up about 4 to 5 properties before making the trip and then scheduled to see each one. And then I made the decision as to which one to purchase.
Yeah, I think that's a great way to get started. So for anyone that maybe has never heard of Turnkey before, can you just explain like how a turnkey company works?
Yeah, of course. So the nice thing about the turnkey company, it's like the name says, they deliver the property to you turnkey, which means that they find the property that needs to be renovated. They do all the renovations. They actually find and place the tenant for you. And essentially, the only thing you have to do is make the down payment or make the purchase and get the keys and turn the key, and your investment is ready to go.
Now, it almost sounds too good to be true, and I think there's some turnkey companies out there that really deliver on the promise that you're going to buy a property that's rehabbed and rented, and it's in a great neighborhood and a great property. And then there's other companies that really just don't do a good job. Like they don't do a good job on the rehab. They really aren't buying good properties. What category actually, how long has it been since you bought that first property?
That first property I bought in September of 2019. So it's been just under 3 years. Okay. And I agree with you. There's definitely a lot of companies out there that don't do what they advertise. And you definitely have to do your due diligence before just selecting any company. I basically came up with a list about 3 to 4 and called each one, interviewed them. My wife and I, we spent, I don't know how many hours talking to each one, multiple phone calls. I would go on to various websites such as Bigger Pockets, Google reviews, just to see the reviews of these various companies to see how they stood up in terms of delivering the service that they promised that they would. And ultimately, I went with the one that I felt would do the best job.
So after 3 years, how has it worked out? Like, has the property performed the way that they promised it would?
Yeah, so I did have some hiccups in the very beginning. So as I said, I purchased it in September and it did not rent until March. So it was sat vacant for about 5 or 6 months. Wow. But because of that rental guarantee, they did do what they promised and they covered the rent for 3 months. And I was actually able to rent it right before the pandemic in March 2020 on a 2-year lease. And the tenant that was there, he was great. I never had any issues with him. It was basically the kind of tenant any landlord wishes for. The only time I heard from him was when I got the notification that the rent check was coming. So it performed very well in that regard. And I was actually I was very lucky in terms of the depreciation side because I purchased that property for about $122,000. And about a year and a half later, it appreciated to 178 when I had it appraised. And basically for doing next to nothing, I saw $50,000 in equity on top of collecting rent for 2 years without issue. So I was very happy with that.
That really worked out great. And now it really concerns me that the property sat vacant for so long. Like, did they tell you why it took so long to rent it out?
No, I think it was a mistake on my part in the sense that I should have done a little more due diligence in terms of what the advertised rent would be. So when I purchased the property, they advertised that it would rent for $1,095. I took that at face value, and they also felt that it would rent for $1,095, which wasn't an outrageous amount, but ultimately we had to lower the rent to about $995 in order to have it rented. And at that price, it rented fairly quickly. And I think it was just a mismatch in the pricing in terms of what they thought it would rent for and what the market was calling for at the time.
And like, I feel like they should have figured that out pretty quickly. Like, I know when I have a property, one of my rentals, if it's not priced right, like I know right away because no one's looking at it. And then we'll adjust the price maybe after a week or two. Like, did they have conversations with you about lowering the price, or were they just telling you it's going to need more time?
I think it was we did have the conversations. I was a little reluctant to lower it, but I ultimately relented. I think after about a month or so, and I think the biggest issue was the fact that it was after about a month or two. It was during the holidays, November, December, in the winter when nobody's moving. So that was definitely one of the issues. But I think, there should have been a little bit more of a conversation in terms of adjusting the rent amount to have it rented quicker. But ultimately, it ended up working out.
Yeah, and that's the truth. And that's really the great thing with real estate is that with enough time, everything generally works out. If we had had this conversation 3 years ago and you were telling me the property's been vacant for 6 months and we had to lower the price, and because like those properties are sold based on the rent amount. And so it's almost like you paid too much for it with it not renting for the amount that they promised you. And then with all that vacancy, like I feel like this would have been a very different conversation 3 years ago, where today you've got a bunch of appreciation. The property's been performing great. And it sounds like you're happy you made this purchase 3 years later.
Yes, and I really am. And one thing I forgot to mention, so that first tenant that was in there, it was rented at the $995, recently left, and I just got a new tenant in there, and it's currently rented at $1,295.
Nice.
So nearly a $300 increase in rent in just over 2 years. Was something I'm pretty happy about.
Awesome. Okay, so that property's been working out great. Now, the other great thing with that property is like going through that experience of buying a property, it gave you the confidence then to try the BRRRR strategy. So how did that come about? Like, why did you do the BRRRR strategy for your second property versus just buying another turnkey?
Yeah, correct. So I did get a little more confidence in trying the BRRRR strategy. And the reason why I wanted to try it is because as great as Turnkey is, one of the drawbacks is that you're leaving a lot of money on the table because you're allowing the turnkey company to essentially do all of the work for you. You're buying the property without having to do any additional work or renovations. And not to sound greedy, but I wanted to basically capture some of that profit that I was turning over to the turnkey company. I felt that if I could find a decent agent, a decent renovation company and property manager, that I'd be able to do some of the work myself. Not the renovations myself, but in terms of coordinating the renovations. So for that second property, I did some additional research where I found a real estate agent who specialized in investment properties and working with investors. And I basically told him from the beginning what I wanted was a property that was in need of renovations, that I could renovate, then put a tenant in there, refinance, and pull my cash out. And without even saying BRRRR strategy, the agent knew what I was talking about. And he's like, oh yeah, I think I know what you're talking about. You want to do the BRRRR. And we were able to get the ball rolling on that strategy. Now,
in most cities, there's good parts of town, there's bad parts of town. And being an out-of-town investor, sometimes it's hard to figure out where a good area to invest is, where a good neighborhood is to invest. How did you figure out what part of town to invest in?
So that was pretty tricky. What I ended up doing was I would basically cross-reference the advice and descriptions that the real estate agent would give me. I would speak with the property manager and then speak with the second property manager. So when I purchased the second property, I wanted to go with a different property manager because I just wanted to, have something to compare it to. Mm-hmm. So whenever a property came across my desk, I would first ask their agent, tell me about this neighborhood. How is it? Then I would take what they told me and compare that to what property manager number 1 told me, property manager number 2 told me. I would also go on the internet and do some quick Google searches into the zip code. One idea that I actually got, I think it was off of a podcast or some article, to actually call the local precinct of that neighborhood and just ask them, can you tell me a little bit about this neighborhood? Is the crime high, low? Yep. Just to get a little more context as to what I might be buying.
And how did everything work out? Like, did you have any trouble getting good contractors or finding the property? Did you have any challenges, or did everything work out perfectly?
Everything worked out on the second one very well. So in terms of the contractor, that's one of the reasons why I went with the property manager that I did, is because they were not only willing to manage the property, but also handle the renovations. They either had an in-house team or like subcontractors that they frequently worked with. So when I had a property that I liked, I was able to basically have the property managers team go in, give me a bid on what the repair would be and factor that into my numbers. And essentially it all worked out because I was able to rent the property at much better than the 1% rule. Just to give you some of the numbers, that second property, I purchased it for $52,000, put in about $10,000 in repairs. So I was all in for $62,000, and I was able to rent it out for $895. Nice. So that one really worked out.
That's great. Now, that property, you ended up selling that. So you rented it out for a while and then you ended up selling it. Why did you sell it?
Yeah, so I purchased that second property in July of 2020 and rented it out. And at the time, I had no intentions of selling it. I was under the impression of wanting to be a long-term buy and hold investor. But as I'm sure you know, the current market has been ridiculous in terms of appreciation and all types of offers being made. So just because I was curious, I decided to list the property for sale just to see what I would get. And with the same agent that I purchased it from, and we listed it for I think 112 or 114 or something like that. And within 2-3 days, I got an all cash offer from a hedge fund, and it was too good to pass up. So I decided to sell it. It was just over the 1 year mark, so I was also able to utilize a 1031 exchange.
Perfect. How much profit did you clear after all the closing costs and commissions?
I was all in for 62. It ended up selling for 111. And the only closing cost I had was the commissions, because the hedge fund, that was just a cherry on top. They offered to cover all closing costs as well. So I think I cleared about 55, 56, something
awesome.
Like that.
In 1 year. That is awesome. So you're doing really great. I mean, you've made a bunch of money on that first property. You made $50,000 on this property, and you've also done another BRRRR. How did your second BRRRR work out? The second BRRRR you did in Memphis?
So this one actually worked out even better than this, the second one. So this was my third purchase, second BRRRR, and I actually was purchasing this property right around the time that I was selling the other property. So it was also in Memphis, and I used a HELOC to purchase this property, all cash. The market was still going up in terms of appreciation. So by the time I was ready to refinance this property, it appreciated to about 164, I believe. And I was able to pull out the entire cash that I put into it with an additional $12,000 from the appreciation.
Beautiful. Beautiful. All right. Now let's go back to the first BRRRR that you did in Memphis. So the one you made $50,000 on. Now you took that $50,000 and you did a 1031 exchange and you bought a duplex in Pittsburgh. Why did you, well, it seems like things are working out great for you in Memphis. Why did you want to move to Pittsburgh for your investing?
So I was interested after having a little bit of success with the first couple of properties that were single families. I wanted to see if I can, I guess, scale up and get into multifamilies. And I just found that Memphis really wasn't conducive to multifamilies. There weren't too many duplexes, triplexes, and if they were, there were in neighborhoods that weren't the best. So I decided to look in other areas and came across Pittsburgh. And basically did the same process that I did in Memphis. I spent the time to find a real estate agent, find a property manager, and had started looking at deals until I found some that I thought were good. And then it was just a matter of the timing constraints of the 1031.
And everything is worked out in Pittsburgh too?
So far, so good. With that one, also had a few hiccups that I'm currently in the process of trying to deal with. Specifically, it's a duplex that one. It was rented. Both units were rented at the time. One was on a 1-year lease. The other was a month to month. And it's a 1-bedroom and a 4-bedroom, 2-bath. The bigger apartment was it's to put it lightly, it was in need of renovations, but much more so than what I thought at the time. So I'm in the process of basically having that renovated, speaking with contractors, and hoping to have that finished by the end of next month, like mid to late July.
Now, you've done such a great job in building out your portfolio, and it's really awesome that you're able to do BRRRRs and coordinate with contractors and realtors and property managers, and you're doing all this from many hours away. Do you find that being out of town is an advantage, or do you feel like it's a disadvantage?
I think it's a little bit of both. I think it's an advantage in the sense that when you're a little more removed from the property, you can't just drop everything you're doing and going to run to see what's going on, what's being fixed, what's not being fixed, because you're not physically there. You kind of have to learn to let go a little bit. So I think it's an advantage in that sense. But at the same time, I think it can be a little bit of a disadvantage because you are so far away. You do have to put in a good amount of time and effort on the front end to put your systems in place to make sure that you're not being taken advantage of, because everything could be fine if you have trusted people that are handling the work for you. But if you don't have those people and you don't put in that time to make sure you find those people, a lot can go wrong in terms of contractors doing a bad job or property managers not giving you the amount of money that you should be getting, or overcharging you for things that aren't being repaired and things like that.
If anybody wants to reach out to Marky, I've got his contact information on the website. You can find it at rentalincomepodcast.com/episode 372. Before we wrap things up, I've got a real quick programming note for you. I came across an investor that owns some rental properties, and she wants to add to her rental portfolio. She'd like to add about $5,000 a month, and she wanted to talk to Chaley Ridge about how she could best go about this, what the best way was to add that kind of money to her portfolio. And she wanted to kind of set up a strategy session. And I thought this might be an interesting bonus episode. So I've got the investor's permission and Chaley's permission to record the call. We just need to figure out a time to make it happen. So hopefully in the next couple of weeks, we can get that bonus episode out to you. I think that's going to be really interesting. Speaking of Chaley, I would like to thank Chaley Ridge for making this episode possible. Chaley is a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of loan programs, including her no-doc loan, where she doesn't need your pay stubs, your bank statements, your tax returns. All she needs is a deal. So if you find a really good deal, bring it to her. She'll give you a 30-year fixed-rate mortgage. The rates are a little bit higher than a full doc loan, but it's still a great deal. If you want some more information, or you want to set up a time to talk to Chaley personally, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056. Thank you so much for checking out the podcast today. Make sure you hit the follow button, and you will be notified as soon as the next episode comes out. My name is Dan Lane, and this has been the Rental Income Podcast.